All right, so again, this is just too much fun, right? So clearly we know today what the market broke down the 50 SMA, and that's a back test, and this is obviously resistance and rejection away. So how do we track all the lower highs that get developed on the way down? Not only track them, but also know where to expect they can start at. Let me show you. When the market breaks down the 50 SMA or has a rejection as you're seeing and then moves away, you anchor a 1-minute VWAP to where the market last touched / broke down the 50 SMA. In this case, it's this candle. When I anchor this VWAP, it's going to provide you the expected lower high resistance. Ready? Watch. Boom. Oh, never mind. Sorry, because the settings are wrong. We must anchor to the high here. Again, whenever you're tracking bearish moves, you anchor to the high. I still didn't change that. Anchor high. Yeah, hit OK. All right, so you see how market breaks down. There's your lower high, right? Now, if I were to add one more VWAP to where the candle touches the previous, you will see that it creates this next lower high. So these are all tested. So now what we're going to do is we're going to move this down to this, and this is going to give you the current lower high. See, right there, pretty much, right? So that's how we basically track breakdowns in the market. Then we attach volume weighted average prices to the breakdowns in the market. That helps us understand where future lower highs will take place at. It also helps us understand that if we were shorting on the bottom of a low, how much risk there would be as the market counter pops back to one of these VWAPs. So, just imagine the kid who started trading for the first time today, thinking the market's going down, short, has no idea that we're going to take it back to here, probably. And then that's where the lower high would arguably be. So got short too soon, didn't know where the trend was at, and then, we take it this way. So again, that's how you guys use 1-minute volume weighted average prices attached on top of bearish breakdowns. And then also do remember this last thing, that the market broke down the 50 SMA here, a green line. I'm going to show you what it is real quick because, this is what we do. Dang it, I don't even have it on the chart, so forget it. We're just gonna go back to the 1 minute. If you watch all the previous videos from this morning, they get super caught up with speed. They're all labeled episode 1, 2, 3, 4, 5 or whatever. So we know there's a breakdown right there. You need to understand that algorithms control the stock market, not necessarily retail or anything, right? So, when the market broke down the 50 SMA here and it went up, right? Someone probably is like, oh, look at this cute little bull flag pattern, I'm going to go long, when really this was a back test of resistance, right? So they painted some cute picture for you, but really computers run the market at the 50 SMA. We decided to take the market bearish, just so happened to create some sort of flag pattern for the pattern traders. And now we're tracking the algorithmic sell move, right? So algorithms control it. That's the algorithm start point. Algorithms are selling this down, and the VWAPs track those algorithms. Cheers.